Hi, everybody. I'm Nani Agbuna, Senior Manager of Content Marketing here at Edison Partners. As part of the recently released Growth Index, our operating partner over the People Center of Excellence, Steve Schloss, called out a number of leadership imperatives. These were based on organizational trends we've seen this past year across our portfolio and led to a passionate fireside chat between Steve, Managing Partner Chris Sugden, and Casey Myers, our partner over Edison Edge, our value creation platform. I hope you enjoy it.
Gents, welcome. Fun little discussion we'll have today on a fun topic that we're all certainly passionate about. But before we do that, maybe a quick round of intros so our audience kind of knows. Everybody knows Chris, of course, but maybe for the rest of us, we need to do some quick intros and make sure we're aligned. Steve, we'll start with you.
Hi, everybody. I'm Steve Schloss. I'm an operating partner and head of the Leadership Center of Excellence at Edison. I also am an executive and team coach working with organizations outside of Edison, and I'm a former multi-decade HR executive and chief human resource officer, more recently in the world of tech and in the world of sports.
What you used a phrase the other day, recovering, what'd you call yourself the other day?
A recovering chief human resource officer,
yeah.
for sure.
I've heard that about recovering employers, but never about HR.
Yeah, after COVID, that was definitely a recovering chief HR officer, without question. And many of my peers out there would use the same term, sure.
Totally fair. We're all recovering something. Chris?
Hey, hello, everyone. I appreciate you saying everyone knows me. Maybe everyone that I hope is supposed to know me, but I'm not so sure about that. So thanks for that, Casey. Chris Sugden, managing partner here at Edison Partners. Have been here for 20 plus years. And my stock and trade was I can walk in the shoes, but I've been doing this so long, some of that credibility is probably reduced. But I did spend the first 12 or 13 years of my career on the operating side, mainly as a CFO and COO. And as we'll get into this discussion, to me, it's all about people. And we have the great pleasure of working with some great ones at Edison and the job we do every day.
Yeah, amen. And I'm Casey Myers, for those who don't know me. I'm about 18 months onto the dark side. I'm also a recovering operator. I don't think it'll ever leave my DNA, but been at Edison for about 18 months. I run all of our value creation strategy and platform and ecosystem. And we'll talk actually a little bit more about that in the discussion today. But the topic today, I was kind of bantering about kind of what we would even call this topic. I mean, one of the tongue-in-cheek versions was human capital. What the hell does that mean? But I think probably a more accurate description is people the real differentiator in growth stage success. And I know we all believe that. I know we've all seen that and lived that, quite frankly, through growth stage. But I thought, the first thing I'd love to cover with us here is let's talk about the pain, right? So, and pain from a portfolio company's perspective, pain from a CEO's perspective. And really, ultimately, any kind of leader in one of these growth stage companies. So as you think about talent, humans, people in this kind of growth stage, what are CEOs struggling with? What are we seeing? We just did our growth index and some fun little leadership imperatives and data came out of that as well within our portfolio. And Steve, look, you're super deep into team and leadership development across our portcos. I mean, what trends are we seeing around pain when it comes to talent and people?
Oh boy, that's a big question.
It is a big topic.
So let's just break that down a bit. First of all, in the context of the term human capital, that's a term that's been around for many decades. But I think in the context of venture and private equity, human capital, I think in the modern world, I would probably state more human performance than human capital. Rather than have a financial engineering view of it, as having a human performance view of things. And from a CEO perspective, I'd focus on two things. One is how are CEOs themselves and founder CEOs navigating what it means to lead in the environments that we're operating in now, and what are some of the areas of focus that are and have become more and more important for growth equity and growth stage companies. So on the CEO side, number one is, to what degree are CEOs really investing in their own capabilities? And what I see happening here is that by virtue of longer hold times, by virtue of the need for more adept and more dexterous leadership capability, CEOs focusing on their own strengths and capability really matter a lot now more than ever. And that comes from, in my view, the focus on human performance and getting results through personal effectiveness and team effectiveness. On a functional basis, when you look at what are some of the major organizational challenges in the environments we're operating in, there are major areas around driving greater alignment, understanding what the value proposition is in running an effective company, understanding what is the approach to building capability inside the company as you're navigating growth, understanding what it means to invest in people in a company, knowing that maybe you have limited investment dollars. What is your strategy to invest in people over time? And ultimately, as we all know, coming out of COVID, is what are workplace strategies and approaches towards both attracting and deploying workforce on a distributed basis, and who's full-time, who's freelance, but also what's the nature of culture and workplace that we're developing to run a successful company. So a lot built into that, but those are a blend of kind of challenges and opportunities that CEOs are facing as we speak this morning.
We use a phrase here, especially kind of in the growth stage area where we play, what got you here isn't necessarily going to get you there, right? What got you to 10 million is not going to get you to 100 million. But I think this is more about who got you here, won't necessarily get you to where you need to be. And one of the default kind of pain areas in discussions when it comes to this topic is we can't find good talent, right? It's on the attract and acquire side versus grow and retain side. But my sense in the last, at least 18 months and meeting with dozens and dozens of portfolio companies and certainly my peers, it feels like the real pain is on the grow and retention side. To your point, Steve, how do we actually maximize and optimize the potential of the people that are here? Certainly, development is part of that, but it's the easier answer is we just need to find different people, right? As opposed to, even if we find the right people, can we optimize and maximize their individual contribution, but also the actual power of the team together?
Yeah, look, I think, first of all, we need to be honest enough in that this industry has lagged in this conversation versus other, maybe more mature industries. And this conversation that we're having right now is a conversation I was having many years ago across many different industries that I've participated in. And so I'm happy to see this industry in particular recognize that. I worked in sport, and sport is an industry where people really want to work in. But once I entered into the world of sports, I learned that the brand of it was far greater than the reality of how people were invested in and viewed actually what it meant to work inside the business. And so it's great to see private equity step up and understand that. But when it comes to investing in talent, one of the great challenges I think for PE firms in general is, what does value creation look like in terms of investing in portco talent? And what are the strategies that firms need to put in place to ensure that with all the discipline that's put in place on the financial side, how can you replicate that on the talent and people side?
Oh,
And that's really important.
hold that thought for a second, because I do want to go to the value creation kind of component here. But before we leave the pain, Chris, when you think about the pain that you're seeing in your portcos and something we missed, what other kind of perspectives do you have around the pain that these guys and folks are facing?
Yeah, I would actually just go back. I think putting human in front of all this stuff, especially in the age of AI, it reminds me of the late 90s and early 2000s and the dawn of the internet, and you had human factors groups. I remember Ameritech and the Baby Bells having these human factors groups. It's just so awful. It's the worst term ever. I've talked to a lot of folks who are running bigger companies and larger PE firms, and sometimes the word people is hard to get out of their mouth. And I think the thing that I'm focused, not only our firm, but every board I'm on, every CEO I'm on, is they aren't assets, they're companies, and they aren't humans, they're people. And probably the biggest struggle is how to deal with people in an age of post-COVID, work remote, politics, and the culture. And do I even bring it up at work? What do I do? We are in a swirl of stuff that can take away from the business. And it's good to see people like the Microsoft CEO realizing, hey, he has to make a statement that we're about the work, folks. And I think what I'm seeing, the pain that's greatest is just having the commitment to say, this is what we do and what we're here to accomplish. And if you don't like that, you want to have some other different calling, you need to find another place to go. And I think our best CEOs have realized, I've got to sort of take a stand on what we're about. And I don't mean the stuff that's not work, but here's our value and mission statement, and here's what we do every day. And if all this other stuff is going to become a distraction to that, you can't be here. So that's one struggle, is just being willing to stand up and make that statement. And I'm not saying whatever that statement is. You're a remote culture, you're a hybrid culture, you're an in-person culture. We're going to allow politics in the workplace. We're not. If we're going to have a discourse, we're going to have a civil one. Whatever the stance is, taking it and being clear about it. And I'm seeing really good, our best companies really do that and do it consistently. And frankly, they did it kind of early on in the days of the pandemic, and kind of just continued it rather than sort of react to a post world. So that's one. Two, I think our best companies that I've seen, founders and the team that got them there actually can get them there. I'm starting to think our own cliche phrase, or phrase that's becoming cliche in our shop, I mean, not theirs. It's really, are you willing to get there? Is the team that got
willing
you
to do what it takes,
willing,
right?
Not even what it takes. Are you willing to be coached? Are you willing to realize that you have other skills you need to acquire? And so the what it takes, I'm not sort of trying to disagree with you, Case. I'm just trying to say there's a grit and a sort of work ethic and all that. That's kind of an element of whatever it takes. When I think of that phrase, I'm really thinking about are you going to invest in yourself and your team in a way that allows you to grow? So I think where Steve is hitting on this, I think tech has been special as an industry because it hasn't become bureaucratic and focused on too much org chart bullshit and all the things that sometimes, no offense, Steve, HR gets associated with. But the good stuff of HR, which is coaching, development, investing in our people. And I'll go to the sports analogy, and I've overused this at times. If Tiger Woods needs a coach and Tom Brady needs a coach, we all need a coach. And I think that's what is starting to be more of a topic. And what's funny about that is tech was way ahead of that. You know, our legendary Bill Campbell in the Valley was way ahead in Intuit days and others. So I think you're now seeing more of tech and more industries take on coaching and realizing high performance teams. And I know that's something that's how we actually really engage Steve deeply as a firm ourselves. Whether we've done it well or not is a different topic for a different time. But I think the bottom line is not only team effectiveness, but individual effectiveness and coaching. I think it's a pain point if the management team, especially the CEO or founder, isn't sort of embracing it. And I think that is a continuous question of how you do it. And then some CEOs think it's a level down. I'm above that, and that is kind of where board members or we have to come in and sort of say, you actually have to set an example. It can't be kind of a level down. It's your executive team, and then on down.
So let's shift to talk about our industry in private equity, even growth equity in that space. And Chris, way better than I do, right? I mean, 3 to 5 years ago, maybe, but certainly not a perfect number. It feels like most private equity looked at, value add was the word that they used to use, and now it's all value creation. But quite frankly, it was not much more than just shoving a few playbooks and processes down portcos' throats, right? And usually it was in a couple of, and very few, predictable areas, right? It's, hey, here's some FP&A process and reporting. We're going to do some pricing optimization to maximize top line and margin. And in most cases, it's a reduction in force. I mean, those 3 things just were the go-tos when they thought about value add and value creation. And that's just not cutting it anymore. Portcos, and specifically growth stage CEOs and leadership teams for that matter, just expect more operating help. I just left this world, and we met with 53 different PE firms, and our expectations were just different. We needed more than just capital. I think it's safe to say LPs consider it table stakes at this point, and PE firms need to continue to differentiate themselves, right? We see a ton of firms in the last few years adding operating partners with varying approaches, by the way. I mean, whether it's functional or generalists, whether it's in-house folks or outsourced folks, and most of which have this model where they charge the portfolio company back for these consulting services. Edison, a little bit of a commercial here. I mean, Edison obviously has a different approach and ethos. Chris, you really you're the genesis of this years and years ago. Could you just share maybe quickly the original vision of what we call Edison Edge, which is our value creation platform, and really how it's evolved over the last couple of years?
Yeah, so I think we're now a decade into roughly the Edison Edge being a thing, as in something named. I think we're 38 years as a firm thinking that if you don't bring more than capital to the party, then how are you possibly going to, deserve to be an investor in a company, because it's a significant dilution in a founder-owned company. Back to the commercial, or sort of making sure that folks know where we come into this movie, roughly 10 to 20 million in revenue, but companies that haven't raised money before. These are few and far between companies. And more importantly, a company who's done that means they're successful in their own right already, haven't raised money, growing fairly quickly, fairly being 30, 40, 50%, and are 15 million bucks in revenue. That's the average snapshot of a company in the last decade at Edison. Their best next option, if you will, is I'm not doing anything, or their best option, because I'm not going to take dilution. I'll sell the company at some point. So our job is to convince them. So, it didn't just dawn on me 10 years ago. It's been something we've tried to do, is bring more value. But 10 years ago, we brought an operator in and said, hey, Kelly Ford, let's stand up something. And she, being a CMO, sort of said, let's name it. Frankly, to you all, I think we're going to publish this the day before, but at our annual meeting, we're going to make a very clear statement. No offense, Casey, don't worry, you're not getting, it's not going to impact your job. The Edison Edge isn't a separate thing. The Edison Edge can't be, I'm in charge of the Edison Edge. That means you're in charge of the firm. So Casey, unless you want, maybe you do want my job, but the bottom line is the Edison Edge is all we do, because it's investor, it's operator, it's operating partner, it's Edison director, network member, it's the whole board, it's the consultants we bring to the party. And I think that's one of the big differences from us and other PE firms, besides the fact that, as you said, we don't charge the companies for those services, which can be material on its own. The idea that we bring this capability all as one unified front integrated team, as I like to call it. And we try and bring it actually before we sign a term sheet, before we're in diligence, way up front. Because quite frankly, testing on both sides, are you really just looking for money and wants to drop off the bag of money at the closing and show up at board meetings, or you really want some help? How are you going to engage in that? So the natural time to do that is way earlier in the quote unquote sales process. You know, Casey, you've sold, and I think that term, some people look down on selling, and as my dad taught me when I was really young, nothing happens until there's a sale made. But the bottom line is trying to convince an entrepreneur we are more than money, and then we're trying to convince ourselves they believe that and agree with that in that pre-diligence part. So I think the nexus was capital is not enough for these great companies. To go from 15 to 100 is going to take a lot more capability. And I think our idea is we're there next to you, in fact, behind you, not in there doing it for you. If we're in there doing it for you, we are probably in a bad deal, in a bad situation, rather than next to you or behind you, assisting, guiding, helping, etc. The phrase I really also hate about PE firms, if I hear we need the grown-ups in the room, the next time I might just sort of say I can't possibly work with you, because the companies that got to 15 or 20 million dollars in revenue and grew, they're probably grown-ups. They may not know what's going to take you to 20 to 100. They may have a vision for it. They may not know how to execute it, but they're pretty damn grown up. And I think we sometimes default to, we as an industry, hopefully not we Edison, default to they can't possibly do this as entrepreneurs. They don't know what they're doing. They haven't seen this before. That's the wrong default. It should be, how can we make sure they can be in the seat? Because I've seen founders do things that paid for, if you will, hired gun executives can't do. We were joking about Peloton before the call. You know, Foley did some pretty special things. The next two after, he also did some pretty bad things. But let's look at the ones like Zuckerberg and Jobs and Musk. You think someone else could have stepped in those businesses and got them where they got to? And I can give you our own version of Zuckerberg and Musk, like an Al Sabloy, like a Todd Roberti, companies that created incredible amounts of value and still are, that wouldn't have necessarily been thought of when they first jumped into that job, as they can take these things all the way to IPOs or the finish line, if you will. So I think that's another sort of, hopefully what we're doing with the Edison Edge is we're seeing more founders be successful with some of the team. Of course, there's going to be upgrading. Of course, there's going to be top grading, but the default reaction shouldn't be they can't. In fact, probably our default reaction should be that's the wrong CEO to back, if we don't believe they can take it pretty far. So that's one of the screens we're making. And at the risk of sounding like a commercial, a founder CEO should take comfort in, we're going to be there to hopefully make you more successful, as opposed to our playbook is replace you. And then the last little anecdote, we have someone in our Edison Director Network. It's more, his history's been more biotech, chief medical officer. He has 5 companies under his belt as CMO. 3 got to commercialization and billion-dollar exits, multiple billion-dollar exits, and 2 failed. That's pretty good for biotech. His description of what PE does is they just think any monkey can jump in and do the job. I'll keep him innocent. He'll use that phrase on his own at some point, but I see that way too often. And where does that manifest itself best? Just go Google PE firms NPS. First of all, you can't find many.
Exactly.
I think we've tracked down about 10 of the brand name firms, and the average is about 16. So anything above 0 theoretically is good. We all know we wouldn't be happy with 0. Edison's is 75, I think, Casey, the last time we measured it. So I think all these things, it's, again, sounds a bit commercial. It sounds self-serving, but do you really mean it when you say you're people first and you're about is it leadership or people, or is it about humans and just, dropping anybody in the seat to get the job done?
So I think that's the dichotomy. So let's spend a minute there and sharpen the contrast, because I don't think people all appreciate the difference of what you just said. And when we say people first and they hear human capital, back to that hair raising on the back of my neck term. The last 18 months, I've met a lot of my counterparts who run those other value creation teams and run teams of operating partners. years. And it's super clear to me at first blush. Like, I was ecstatic to find people talking about this kind of thing. And now, granted, it was under this umbrella of human capital. So the idea that it was there got me really excited, because I do fundamentally believe that this is a key differentiator in growth stage, having lived it. But Steve and I together have been at a number of conferences in the last couple of years. When you pop open the hood on this human capital thing, it's basically just glorified executive search. I mean, it's the, hey, we'll help you rip and replace some butts in seats by letting you use our internal recruiters. Like, that's their only playbook for human capital. For, like, as an operator, again, who really has just been over here for less than 2 years, that's just offensive. Like, growth stage leaders need way more than that. Leadership development, team effectiveness, cultural guidance. And dare I say something else that deserves a lot of investment in these coming years, especially as we think about longer hold periods, Steve, which is a good call out, is first-time manager training, right? So, Steve, you lead what we call our leadership and people center of excellence. We have multiple centers of excellence, but leadership and people is a very, very unique area of investment in the private equity space. And certainly, as we think about Edison, I personally think it's one of our major differentiators. Honestly, it's one of the reasons I came to Edison. So there you go, Steve. I credit you for the reason why.
My pleasure.
Tell me more about let's share with the audience, kind of what does that center of excellence look like? So, Steve, you head up that center of excellence.
Sure. So before I do that, there's two things I do have to say. So first of all, Chris, your point about the Edison Edge not being a thing, as opposed to the Edison Edge being a holistic strength of the firm is really great to hear, because I would agree with you. It's not a thing. It's just the nature of what makes the firm really good at what it does. And as it relates to Casey and you and I have had the opportunity to both be on panels as well as be participants in quote unquote human capital conferences involving PE firms of varying levels and types. There is no question that search and recruitment is the primary part of the equation that these firms are focused on. And when I sit on a panel or I'm talking to people, the other part of the equation, which I'll say is the performance part of the equation, is really nascent territory for every one of these firms. And they're really not sure how to approach it. In most cases, they might maybe outsource some of this work to other people because they really haven't structured themselves internally to do it effectively. And so when I speak about Edison, I'm without question in the extreme, in the minority when it comes to what I do and how Edison applies the notion of leadership center of excellence. And in return, what I receive from people are outreach saying, I need to understand what you're doing. One of the critical differences is that the term people first, while it can be very generic, the first thing I will say that's really important here is that many of the folks who are in the talent area of PE firms actually do not work and have active relationships with CEOs and members of executive teams in the portfolio. They are doing the work through the investing partner. And so they don't have the ability to nurture the relationships and, in fact, have meaningful people-oriented relationships that naturally should occur anyway. So the way Edison approaches the Leadership Center of Excellence, I'd say there's a number of things that happen here. Number one, when it comes to the diligence part of implementing a Leadership Center of Excellence approach, is looking at the CEO and the executive team as both customer and investee, and the questions that we use and the approaches that we take to assess potential stewardship, capability, where their strengths and weaknesses, are done through the lens of performance and people-mindedness, knowing that there is help that's needed. And is the person or people seen as coachable? And are they people who appreciate and understand what it means to be supported beyond just doing things themselves, which is always a great weakness for a founder CEO, which is knowing when to let go and understanding what's required. The second thing is what we do is do in-depth 360 work with CEOs post-investment to ensure that there's a grounding and understanding about how am I showing up and where do I need to begin to think about as part of the work with me in coaching, certainly within the first 180 days. The third thing we do is what I like to call day zero sessions, which is reassessing the team through diagnostics around what got me here is not going to guarantee what gets us there. And let's use some diagnostic work to reset the dial on what success looks like moving forward. And the other thing I would say around just thinking people first is a process we've implemented where we facilitate a series of conversations between the investing partner and the CEO. And the purpose of that is to ensure that the relationship starts and continues on a strong footing. Because you've gone from a dating period of determining, is this a good fit for both parties, to now a functioning relationship that needs to work over time. That relationship will continue through the board context, but it's a relationship that needs to ensure and understand that how do two parties work effectively is an important part of the journey. And we believe in the importance of nurturing that relationship over time. So all of those things lead to stronger foundations, stronger performance. The other thing I would add here is that on a continued basis, what Edison does is, and certainly what, Casey, what you and I do is focus on ways to ensure continued learning. And there's a couple of things there. A is we have what's called CEO Quarterly, which is a cohort of small groups for CEOs to engage on a regular basis for peer coaching and learning. They're all experiencing something together. Let's give them a chance to learn from each other. There is an ELT conference that occurs regularly, which is a gathering of all heads of functions around the portfolio for their own learning, which is also part of our network of roundtables for those functional areas to ensure community and learning over time. And in all of those things, those open doors for continuing to apply a people first mindset across not just myself, but all of my operating partner peers. So that just gives you an idea of how all of that kind of connects together and more specifically, leadership center of excellence.
It is fascinating how the people first manifests itself across the different operating partner functions as well. Operating as
Casey, let me just pick up on something Steve said at the very beginning of those comments. The relationship and the orientation of how that gets done and do you have one even? I think that's probably the thing that in fact the more I see, if I see board meetings not happening in person, we can debate whether or not work can get done successfully or not, remote, hybrid, whatever. But I don't know how you can have a relationship as a board if you've never met. And I've seen companies, thankfully it's a very small minority of our portfolio, that literally haven't had more than one in-person board meeting. And just to be a self-criticism, because we've done a good job praising ourselves, so to speak, that has to stop in our portfolio. It has to stop in all portfolios. So that's sort of like table stakes. But more importantly, the idea of true relationship of not just the investment partner or the lead partner or whatever, but if you're going to have multiple people engaging, they actually know each other. And I think there's one of the things that this idea, whether it started with work-life balance and then this culture sort of struggle, and then, oh, we can't go out and have a good time together and get to know each other. I think back in my 30-year career and sound like a grumpy old guy, but over drinks is where you learn the most. I mean, that, and whether the drinks are an athletic, non-alcoholic beer, or you're having a drink. The bottom line is letting people actually get outside of the work world and tell you what's really on their mind and what they're thinking about. And I'm reflecting on a recent board meeting and that happening. And a couple of us board members saying, "What'd you hear? What did they share?" Because we actually try and make the board dinner not a board dinner. That's actually a big mistake. Invite the management team. Like, it ends up being, okay, 3 or 4 rounds of 3 or 10, 3 or 4 rounds of 10. So you've got 30 or 40 people, but why not? If you've got a company that's got 10 or 15 important leaders and you've got 6 or 8 board members and observers,
if you're there to truly help, right, you got to get to know the people.
So 3 or 4 times a year. And I'm sort of getting into blocking and tackling, but I think it does, as Steve said, starts with, do you have a relationship? Do people trust each other? Do they know you're actually a person, not a human, a person? And do they actually know you're not just a board member? What are your goals? What do you think about the company? They actually want to know. And I say they, management teams, the board has this sort of special relationship. I was talking to a CEO literally yesterday about this. If my whole team could only hear how happy the board is with the business, and if they could also hear live, and I'm like, well, recording it's tough, but it is interesting. Do we record the feedback session and play it back? Do we have more board time with the town hall or whatever you do as a company update on a monthly basis? How do you convey? Of course, when it's going bad, if you're going to be transparent, you
got to go both ways, right?
Do it both. But the point being, if you don't have a relationship and this board becomes this kind of thing in the sky that operates, I picture some, up there in the so out of touch. That's kind of what happens sometimes with companies too, right? Then you show up on the scene to help. And we're not on video, but help in air quotes, as they say on the radio for the listeners at home, like help. That usually is code for, oh shit, the board or the PE firm's coming, someone's losing their job.
Yeah.
Like what a horrible feeling that is. And having walked in those shoes, and as you said, both of you said, kind of, it's almost like reflex. It's almost like breathing.
I know.
We just got to make a change.
I know.
You don't even know what the hell's going on in the business. How do you know you need to make a change? So anyway, it sounds a little preachy, but I can tell you literally in the last 2 weeks in board season, while we're recording this topic of, is there connection? And one company is actually kind of reinvested in this. Let's have more of the team at the board dinner. And actually, let's have some of the management team get up for 5 minutes and talk. It's created a really, frankly, the board meeting, you can get past, you don't need updates because you did it at dinner. And so there's a bunch of best practices around kind of what do you do outside the boardroom, not only to create trust, but relationships, and also have it be a little bit more casual so everyone doesn't feel like they're performing. And then that's my last comment, is performative. The performative act as a board, it shouldn't be a show. It's so hard to get that across, but back to the trust. If there's a trust that the board is here to, back to air quotes, help and be a value add partner, you won't feel like you're on script. You'll feel like you're sharing what's going on in the business and kind of talking about the issues that matter. So those are some thoughts that I'd have on, as folks who are kind of, what's my board really doing for me? Kind of take it. You get what you pay for.
Yeah. Yeah. And by the way, Chris, I think in some ways what you're saying translates to where just private equity and growth investing is headed, really, which is when you're moving from transactional financial thinking to relational people thinking. That's a shift that requires a shift in every participant to think differently about what we're looking for in terms of both value creation, but return involves the people that we're investing in, and what do we do as people to work effectively together. And that's not a transactional thing. That really is a relational thing. And while obviously some things can be transactional, if you're thinking about longer hold times, you do need to have strength in relationships. And when I work with CEOs and Edison partners, for example, everyone has different styles. Everyone has different ways of looking at things. Old habits are not easy to break. on both sides of the equation. And so it's important to understand that the investment is not just in the company, it's in the person. And so let's make sure we can help each other in the process. And I think in general, if people can understand that, it creates greater opportunities, like what you said, which is turning board meetings and dinners the day before into relational experiences. And board meetings should not be transactional experiences. They should be based on trust and based on seeing the capability in front of you and supporting it versus necessarily pushing down on it. So
the part I'd add or kind of play off you, Steve, and I'll try and keep the comments short, but we have a really good fortune. I have a personal good fortune of working with someone who was in Casey's role, is now running a company at a really big firm. And what she was saying to me was, Chris, yes, you're testing me to say, did we see kind of this go-to reaction as recruiters and make change? For sure. Are they spending enough time on people? No. But even more importantly, the big firms' playbooks, first of all, everyone's got them now. So you're not differentiating anymore. But even worse, you're all paying a pretty big multiple now. Money's not free. So let's just get back to nuts and bolts of returns. You better culture and high performance, and the people are what is going to matter. And those who have the best people and the highest performing teams are going to win. Because when all other things are fairly equal, that's going to actually be the quote unquote true value driver. And I think this kind of gets into, so how do you measure it? And we'll have that as a follow podcast because we're doing some good work there. Thank you, Casey. How do you follow up on it? How do you make it real and not feel like, I watch some boards where folks who are in bigger shops than us and manage a lot more money and theoretically know more about how to build a bigger company. We start talking about people and culture. It's like onto the email. If the laptop wasn't open, it opens. If the phone wasn't out, it's out. And it's like, holy shit, this might be the most important topic.
Exactly.
And I love it when I've got founders, big PE, and us at a table. And some of the folks would know who I'm talking about if this is wide enough to listen to. That's my go-to reaction. I just look around. Who stopped listening when we started talking about people and culture? You know, and that's a little test for those CEOs out there. If you're listening in this podcast, is okay. Now I know which ones actually I've got to have a subcommittee to talk about this, because some people just aren't there yet, but they're going to get there. And I'm glad this kind of topic is one that it's not just glossing over, because sometimes this people topic can feel like, you know, just like work-life balance, good luck. That's what this topic can kind of feel like to some people.
Yeah, we'll leave it at that. I think it's a great way to finish. Listen, selfishly, I love that Edison not only says this, but does this and believes in this. Again, it's one of the main reasons why I'm here. I love the fact that we're differentiated that way. I love the fact that we lead with a real people first approach, you know, but the part of me wants more for all of these growth stage companies. Part of me really wants PE to wake up and do this differently. And I agree with you, Steve and Chris.
Well, just to be clear, part of me doesn't want them to do that, so we stay different. But that's
my point, right? Part of me wants them to kind of continue to be ignorant to this kind of thing, but the other part of me does want this for it. Look, it's important for growth stage and success just economically in our country. So it is important. I appreciate the fact that we are passionate about this, and we'll continue to beat this drum and hopefully kind of lead the change a little bit. So guys, thank you very much. Appreciate the time and the thoughts. We'll catch up later.
Thank you both.
Thanks.
Good to talk to you.
Enjoyed it.